No change to the Bank of Canada rate this morning, which means that the retail prime rate that you and I pay remains at 7.2%. But the more important question is, when will the first rate cut happen? Everyone seems to have the answer around June. I challenge you to find an article or media piece that doesn't include that prediction. I'm not so sure that we can hang our hats on that expectation. It's possible, but it's certainly not as guaranteed as the media is portraying it to be at the moment. While inflation has come down and GDP numbers are showing weakness in the Canadian economy, there are two factors that might derail the June timeline. Number one, contrary to the Canadian economy, the US economy is still showing a lot of strength. And so it doesn't look like in the US rate cuts are imminent. And if the US doesn't cut rates on the same timeline as Canada, that will mean that the Canadian dollar will get weaker, and a weaker Canadian dollar will lead to inflation here in Canada. And number two, an ill-timed rate cut could reignite Canada's housing market. As chief economist of Scotiabank put it so elegantly, it would be just about the dumbest thing that the Bank of Canada could do relating to an early rate cut. So in summary, I'm not saying that the Bank of Canada won't cut rates this year, but I just think we have to readjust our expectations on the timeline.